Morning, everybody. I'm super excited to welcome 𝗂𝗍 𝗧𝗵. 𝗂𝗍, welcome.
Thank you so much for having me, 𝗧𝗵𝗲.
You have an amazing background. I know we've been going back and forth for a bit through LinkedIn. But before you get started, I'd love to have you introduce yourself.
Yes, thank you again for having me. I'm 𝗂𝗍 𝗧𝗵. I'm CEO of Partner1. And I have been in partnerships for longer than I care to carbon date myself. Been at enterprises like Qualcomm, Intel, Microsoft, and then at startups like 𝗪𝗵𝗏, which was acquired by HubSpot because of our ecosystem-led motion where I was the VP of partnerships. So that's my background. I'm an engineer by training, and I try to bring those same processes, those same insights to partnerships. I'm really keen to dive into this with you now.
Yeah, so a couple of questions, follow-up questions. First, why did you get into partnership? And second is, why did you start your company?
Oh, great questions. So I think like a lot of partnerships folks, I fell into partnerships. There was not a defined partnerships journey. And I was at Qualcomm, I was a systems engineer, and I actually got pulled into the conversation back when Apple and Qualcomm were talking about working together. And I guess for some reason they liked how we worked together. And so I was brought on to manage that partnership and then just fell into it. Everything from the engineering aspect to the business development side of it. Partnerships is so holistic, and for my nonlinear brain, it really fit my personality and how I think. So I just stayed on that path and then continued on to partnerships at Microsoft and then to a startup called 𝗪𝗵𝗏. At Microsoft, I was building a program called Pegasus for high growth startups to navigate the ecosystem and make the most out of it. And a startup called 𝗪𝗵𝗏 reached out to me and they said, can you build our partner ecosystem? So I was bitten by the bug. This was in 2021 when everything was booming. So I hopped over there and built their partner program. And a huge piece of it was actually integrating with HubSpot. And they ended up acquiring us, and happy to talk more about how that transpired. And when they got acquired, I didn't want to join another big company. So started a company called Partner1 to actually help businesses apply these ecosystem-led growth principles and grow.
Awesome. So we'll spend a lot of time on Partner1, but let's go back to 𝗪𝗵𝗏 a little bit. Can you walk us through your journey? When you got recruited, what was the mandate from the C-suite? What were your goals in the first year? And how did you build out what you were asked to build out?
Yes. So 𝗪𝗵𝗏, for those of you who don't know about it, it was a data analytics platform. And people often thought of 𝗪𝗵𝗏 as a MarTech platform, which is an incredibly crowded space. MarTech has, I can't even begin to count the number of zeros of companies that exist in that ecosystem. So when I joined, I built out a partner program for agencies, for technical integrations, for bigger strategic alliances. And the whole goal was to add net new customers and build pipeline and then eventually revenue and to shorten deal cycles. And then the war with Ukraine hit and everything changed. And then it turned into, how do we boost our bottom line? How do we have a profitable program? And candidly, how do we solve for an exit? And IPOs were getting delayed back then. So an acquisition was the most natural exit for us. So at 𝗪𝗵𝗏, then we pivoted to, rather than be a MarTech player, how do we actually power the entire MarTech stack with our data, with our intelligence? And so then it turned from having a standard partner program to how do we monetize our API and allow people to build using our data. And so that's the program I built out. And HubSpot gave us that marketplace, gave us access to hundreds of small, medium businesses that built using our data. And eventually that led to the acquisition because we were so integral to HubSpot's ecosystem. So it was a really remarkable journey. It was a lot of ups and downs and a lot of learnings. Yeah.
That's amazing. So let's dial back a little bit. Let's go back to the first conversation you had. It's interesting. You asked your CEO whether it's for growth or whether it's for profitability. Why was there a choice? Why wasn't it both?
Because in the go-go days of 2021, everyone was solving for revenue and exits were at multiples of revenue. So in my mind, I like profits. I like having the flexibility of not having to raise for capital. Not everyone thinks like me. And so that's a great question, actually. It's a spectrum, right? And we could have landed somewhere square in between, but we were going big. We were going for an IPO. And so the CEO said, I'm just going to pick one of your two choices and not be on the scale. We're going to go for revenue. But you're right. Maybe I should have reframed the question and been like, where on the spectrum would you like to fall?
At that time, I think it perfectly made sense. In 2021, it was all towards the north. Yeah. But walk me through a little bit. You guys agreed that you're going to go after for growth.
Yeah.
So walk me through the construct. Like what happened after the meeting, the next day, the week after, the month after?
I compressed what should have been a 90-day start into a 30-day start. And because we were a startup and we were growing so fast, everything was inbound. We were not really doing much outbound. And partnerships would have really been that first outbound motion. So I took a look very tactically at existing contracts, the kind of customers we had, what their pain points were. And that really helped me understand the different needs we were solving for, and therefore the kind of partnerships we wanted to build. Back then, we had some pretty major competitors in the data intelligence space. 𝗧𝗵𝗲 was a huge incumbent, and they were building a walled garden. There was a very closed ecosystem. And so then the question began, do we want a closed ecosystem, or do we want an open one where we allow everyone to build with us? And I made a very conscious decision to go open and to build kind of these lighthouse wins with the biggest names in different pieces of the MarTech stack and use them to get other companies in each layer of the MarTech stack to build with us. And so after defining that strategy, I wrote it all down, ran it past relevant stakeholders in sales, marketing, product, of course, the C-suite and board. That's when we started actually operationally building out who are these marquee customers. We had scorecards for everything. We had checklists as to how we'd score folks. And we came up with a game plan as to how to recruit, onboard, enable, and then sell. So that was essentially what should have been 90 days compressed down into the first 30 days, and then it was execution.
That's amazing. So going back to the recruit, let's go through the journey, partner journey that you talked about from recruit to onboard. Like, how did you put together a list of recruit? You said that was an outbound effort, so I'm assuming we didn't have a lot of inbound in, but how did you target? How did you zoom in? Or maybe, so you talked about your focus on recruitment. How did you figure out who to go after and recruit?
A couple of things. We had clients in MarTech. We had clients who were non-MarTech. And pretty early on, I saw that MarTech was really crowded and it would be hard to stand out. So we really needed to monetize our data through our APIs and power different parts of the MarTech stack. And then it turned into a research project. We didn't have Claude or the other AI models back then. So it was a very manual process of figuring out who the leaders were really in each segment, for example. Figuring out intent, we figured out who the winners were in that space, or the leaders really in website A/B testing, who the leaders were. And then we literally reached out to them and gave them a value proposition that was a no-brainer for them to integrate with us into their products. And their customers would win, their products would shine. And the win for us was we got to use them as the poster child for their segment to draw others to build with us and bring their clients to us. So yeah, it was a very manual process back then.
And I did a session with 𝗵𝗆 in our previous company, and they had a whole integration first strategy, and they went through a very similar process, reaching out to the ISVs and getting them recruited. Can you walk us through a little bit about the onboarding process when you brought these folks in? What did the onboarding process look like?
Yes, and onboarding, I love that you're asking this because so often it is ignored, and it is one of the most important touch points with your partners. And so we had a very clear onboarding process. Of course, it evolved as we worked out the kinks, but we wanted to make it simple, quick, and easy. So we had collateral ready-made for the partners that they could use. We had very clean pricing and packaging. And what we did for our partners was, once we got them to understand the value proposition, we actually had stakeholders defined that we'd need for the onboarding conversation. And we'd invite them into the conversation. And for each of them, we actually had very clearly defined manuals, for lack of a better word, on how to partner with us. So the technical team, how would a technical integration work? And because we were an API, it was really clear, really easy to implement. For legal, again, we had very clear agreements. For finance, we showed them when to expect reports and where to pull data from. For marketing, similar packaging. Here's a joint marketing collateral. Here's what we're going to work on with you as a template, as a starting point for that conversation. And most importantly, for sales, we actually had sales enablement content that we had created based on their external facing material, and they could revise that. And then we would hold onboarding calls for the sellers. We would train them. We would run sales incentive programs, at least initially, to drive that appetite to partner with us and sell with us. And it was a very streamlined process. We actually had clear check-ins, clear goals, and most importantly, clear communication pathways. Because if we're not being honest about what's working and what's not working in the partnership, it's not a partnership. So very tactically, that's what we did.
That's fantastic. So let's focus on the last two steps, and I want to revisit these steps again, maybe through today's filters. They were onboarded, and then you said there was enablement, and then there was selling. So can you double click on each of those two steps, what they look like?
Yes. Enablement, we found it was a recursive process because people need to see stuff and then questions come up. So we had to address that. So for enablement, we would start at a very high level with the sales team. This is our process. And candidly, this is how you guys can retire your quota and close bigger deals faster by selling with us. And that to most sellers is magic. So just showing them how working with us could help them close bigger deals and retire their quota faster. It got them to pay attention. And we were fortunate. It was a very simple integration and process. Like they literally had to sell access to buckets of API calls. So it was really easy to sell and they could add in their margin. And so once we did that, sales enablement was quick. We actually set up a Slack channel with the sellers for our partners so they could ask us questions in real time and we could support them on a deal by deal basis. And then you said the second part was actually selling together. I think that was the next step you asked me to double click into. So we flowed very quickly from enablement because once they understood that they could add pretty big margins to their deals quickly and then drive adoption of other pieces of their core product, sellers got excited. And so we actually found, and this is something we repeated over and over, we found some sellers that were really bought in to the idea, and we really went into deals with them, went into their prospect list, their customer list, and sold alongside them. And once we had those evangelist sellers successful, basically we helped them close deals together, they actually drove FOMO among other sellers on their team. And that's how we started that flywheel of selling together. And so it's something we found over and over again in partnerships is finding that one seller who will be your evangelist and who will work on partnerships. And then they will basically be the tip of the spear into the sales team. Because they'll say, look, I hit 500% of my quota because of this one partner, and you can do the same. And that's really how we started selling. And so then we replicated that model at other partners too.
That's amazing. From target to time to revenue, can you walk us through roughly, without getting confidential stuff, ballpark, deal sizes, margin, some structure? What is the average velocity? How did the pipe look like?
Oh, this is my favorite part because when we started out, the partnerships team was small, of course, like most partnerships teams. The ACV was 5 figures typically, and it was a very competitive market. And our first deal, this was about 4 or 5 months into my joining, it ended up being a 7-figure deal. And it just closed out the quarter. And I remember as CFO, he sent all of us champagne bottles. He was like, this is the biggest deal in our company's history. And it closed that big and we were able to add a couple of zeros at the end of that deal because we completely changed the sales model. It wasn't a buy our product. It was more like enhance for this customer that bought our partnerships deal. It was use our data to enhance your product and add your margins. You'll make so much more off of this deal than you would without it. And it just became the template for future deals. And rather than try and compete as we were doing with some of our partners, we actually ended up powering their products and them embedding us into all their deals. Yeah, I've seen this over and over in partnerships back when I was at Microsoft, now in my role at Partner One, also at my role at Clearbit. Just partnerships can add zeros. They can completely change the trajectory of your company when done right.
For sure. I want to go back and some of the posts that you have recently shared on LinkedIn and other areas. This whole framework of revenue first and consequences later. Can you double click? Because when you're talking about velocity, you're pulled into that growth and you don't worry about what will happen maybe 6 months or a year and a half later. Can you, what are the things that people need to think through when they're chasing growth for growth?
Yes, that's such a good question, because growth at all costs can come at a really high cost, and especially in partnerships. And I think the post you're referring to may have been the one I did on Flock and Amazon, and that partnership not taking into account customer sentiment and how customers and partners would feel about their data being used, and then the customer attrition that ended up causing, I think, the breakup of that partnership. And so it's a cautionary tale, because in partnerships, so many times it looks like a great idea on paper and the financial models support the partnership, but the soft side, such as customer sentiment, is ignored. Even partner implementation, can they actually follow through and implement the partnership terms, is ignored. And then the things that are not considered are, how do we think about the end of a partnership? For example, in our agreements at Clearbit, we actually thought about this and said, what if the agreement doesn't continue? How do we make sure that the customers are supported and there's an off-ramp support period to make sure there's no downtime for them when they're using these embedded products? So that customer sentiment, customer support after a partnership ends, that, I think, just the customer centricity is often ignored in partnerships, and it needs to be a key piece of both the partnership agreement and also the legal conversation.
So let's also build on another theme that I've read in your post about this whole notion of multiplication of effect using AI. So going back to the construct that you had was absolutely the right construct, targeting the people, going after them, getting them excited, getting their sales excited, and going deals. But when you have a small team, you're so focused on execution, especially if you're having success, you're chasing that model. How does, in today's framework, a lot has changed last 5 years, especially with the agentic framework or agents or copilots, whatever level of engagement. So do you see that you have someone watching out for a framework and identifying risks, or do you see someone doing the grunt work and you're stepping back thinking more about risk? How does that play out? If you have to go back and rebuild those relationships today, how do you approach that today?
I've served on boards as well, and I candidly think it comes to the board to drive governance of a company. And if the company doesn't have an active board, then someone at the C-level needs to be looking at risk and management. I don't know how you feel about this. I'd love to get your thoughts too, but governance across the board is so crucial, and often is just a line about, what do they call it in these legal agreements? Something about limitation of liability and very tactical things like that. But what about reputational fallout? And so all of these pieces, I believe it has to start at the top, whether it's the board or C-level, mandating that these are the principles that we agree on and we will not violate. And some of those are our customers' privacy and how we use it and how we share their data, and consent. That needs to be a huge piece of it, especially when you're entering a partnership. How are you talking about consent and acting on behalf of your customers? That's something we actually did really well at Clearbit. We made sure we were protecting our customers and their data from the get-go. And this was 5 years ago. And it's something we continue to advise on when we're at Partner One, especially because with AI, your data can end up anywhere. And we don't want that. You don't want to be the party responsible for it. Data flowing out in egress. So especially in partnerships, we strongly recommend in partner agreements having terms around protection and consent and opting in and things like that. And also putting guardrails around not commingling your customers' data, things like that. That's really important to enforce.
So I'll go to the next one. Looking at going back to what you just said and some of your posts, there's a huge benefit of deploying various sort of AI tools, whether it's point tools at the edges or like an agentic framework that even include governance from a data and orchestration perspective. And governance framework are incredibly important because if they're weak, it will just fail faster. So I will come back to this a little bit later because most of our customers are in enterprise, and this is a big discussion in 2026. But let's go back to the positive side of things from a multiplication perspective. If you had to go back and rebuild that program, how do you approach that today? With the assumption that there is a strong governance in place, there's checks and balances in place, and we'll talk about that separately. But let's talk about execution. How can you speed that up? Multiplier effect that you talk about.
Oh, can I take Claude and all the other AI models back in time with me? Yeah.
Of course.
Assuming yes, it would have been a game changer. Oh my goodness. Every layer of that stack that could be automated would have been automated, of course, with a human for checks and balances. We would have everything from identifying the right partners. We could have used AI for that, outreach to potential partners, and all the way through creating collateral, automating like on your platform, utilizing platforms to actually automate the onboarding, the management, the deal flow, the metric measurement, all of that we would have used AI and tools for. The only thing we wouldn't have used AI for perhaps would have been the human-to-human partnership conversations, but maybe there'll be a world where agents are having those conversations in a couple of years. And I'll be sitting on a beach with a tropical drink. The agents do.
Yeah, with that in a direction in mind, let's talk a little bit about this whole evolution of revenue architecture that you also talk about, right? That certain things that were not attainable before are quite attainable today if they're thoughtfully designed from a people, process, and platform perspective. So can you unpack that framework that you have talked about quite openly?
Yes. We have actually started to incorporate a lot of these tools cautiously into our processes. And a lot of it is internal testing. We test internally as though we are customers and we are partners. And even now, before rolling out to our customers and partners, we make sure there's a human in the loop. Yes, AI can create an email, but it cannot send the email. AI can summarize meetings with consent, but it cannot do anything beyond that. So every step of the way, there are human checks and balances. Perhaps I'm overly cautious, but I'm an engineer and I've seen things fail catastrophically. And just because of corner cases we didn't think of. But to your question, if companies are not using AI or not at least considering what can we automate, what is the grunt work that we do that we can automate, they're doing their teams and themselves a huge disservice.
Where do you see today, Julie, through your sort of client base, as you're engaging and helping them to construct their programs and execute and scale, what are the 2 or 3 most common areas that you're seeing deployment of AI tools in what form and shape?
A lot of it is in demand generation. There is so much automated customer identification, intent signal usage, outbound outreach. We're seeing a lot of that. A lot of collateral generation can be automated once you have the right templates and human input. We're also seeing a ton of really good use cases when it comes to speeding up agreements and just operational aspects. So you sign an agreement. Actually, even before you identify the terms, AI can auto-populate the agreement, send it out, and then take that, create an invoice because systems are connected and they're talking to each other. And because we work with slightly more mature companies, Series B onwards, they do have checks and balances in place. So there is that human component. But for smaller companies, this would free up so much time. My goodness. I can totally see a 2-person company operating like a 20-person company using AI.
And from an approach perspective, let's maybe double click a little bit in your organization, Partner One. What do you offer? What is the construct? What problems that, that you can go after in 2026 that are real, that are big, and can have an impact? How are you approaching that from your firm?
Yes. So our mission is to help companies grow profitably and globally using ecosystems and partnerships.
And we drink our own champagne, so we use partnerships to grow our company. And what we're doing in 2026 that's really going to move the needle for our clients and ourselves is to go very deep into enablement, education, actual assessments and conversations with operators. All of these actually help businesses diagnose what's working, what's not, what will actually move the needle for their business, and learn from people who've been there, who've done that. We're holding a bunch of events, several in New York City, so if you're local, please check us out. I'll share a link to our upcoming event on April 21st with Datadog, Redis, Microsoft, and several others that we have coming up in May and June and throughout the year. I'm also sharing links to a couple of free assessments that you can take today if you want to understand how you're performing compared to your peers when it comes to activating your partner ecosystem potential, also using things like marketplaces for your growth. I'm someone who learns by examples and by doing, so my hope is that by people doing these assessments, by attending these talks, by learning from others who've been there, done that, and have built some of the most powerful ecosystems in the world over and over again, companies will actually understand how to use these ecosystems and partnerships in their business and basically unlock all of that latent potential that is just waiting to be unleashed. So if you guys have any questions, please reach out. I'm 𝗠𝗐.𝗧𝗏@partner1.io, and that's our website at the bottom of this page, www.partner1.io. And I want to thank you so much for listening. And thank you, 𝗧𝗵𝗲, for having me. This was a really fun talk.